Well, Mayuresh Joshi from Marketsmith India joins in on the show. Hi, Mayuresh. Good morning. Good to see you in. Mayuresh, what do you make of the auto pack? Yesterday you had a big run on a lot of these names. You heard the management of Ashok Leyland. What's the view on this name or Maruti? Both of them were the standout gainers yesterday.
Morning, Nigel. Always a pleasure to be on your show. Two things. One, I think from a sector perspective, I think we remain optimistic on select names. And therefore, names like a TVS Motor, Hyundai, which I've discussed on your show numerous times, is something that we continue holding in our portfolios. Obviously, with the announcements that have been done, the expectation that is largely getting built in now is that there will be some increased activity as far as volumes are concerned. And therefore, I think a stock like Maruti, which probably has a lot more in its product suite, right, from entry-level vehicles to the new vehicles that they are now developing, both in the hybrid and the SUV category, at very attractive price point amidst competition. And let's not forget the sales network, the after-sales network, the spare parts, which are very, very reasonable as well, becomes a huge value addition. So yes, I think that probably becomes something to be watched out for. But in my opinion, again, I think a few auto ancillary stocks might also start doing well. I think they have had some reaction yesterday. You did see some element of action happening within the entire pack. But a stock like Minda, as an example, is something that we've kept on our radar. For the simple reason that a large part of this business comes domestically, 89%, 11% from global operations, again, largely diversified between Europe and North America as well, which probably hedges the risk in terms of higher tariffs. The EBITDA margin performance was reasonable. Because of higher input costs, obviously the margin hit was there on both autos and auto ancillary at the pack. But generally, I think with better orders expected to come through with the European FTA, the UK FTA as well, the expectation largely is that the kind of products that Minda has, right from switches, acoustics, to seats, I think it services a large part of addressable solutions, which is very, very evident in terms of the entire EV transition that they're probably doing. And the content value per kit from ICE to EV, which can be 3 times from 11,000 odd to 35,000 rupees, which can be a huge value addition going forward. That equity is also not too high. And therefore, in my sense, autos selectively should continue doing well. We continue holding Hyundai, TVS Motor, Maruti remains on our watch list, and so does Minda.
Okay, so that's as far as some of these auto stocks are concerned. Mayuresh, hi, good morning, good to have you on the show today. What about consumer durables, ACs, coolers, even the B2B suppliers? All the stocks were rallying yesterday. Would you rush in? Because, I mean, otherwise they've been dealing with sluggish demand, untimely rains, and it's been a complete washout Q1 for all of these companies. Would you be a buyer?
Morning, Surabhi. I think the sentimental reaction has come through. Now, the actual numbers, how do they play out in terms of demand trends, is something to be seen as we head into the next few quarters. I think the hope here is that demand should come back quite significantly as we head into the festive season. But my own sense is that whatever we've seen in the past, and this was what we were analyzing over the last few years as well, once the consumption demand starts coming back, I think it's more bottom-up as we see it. So I think it will start from lower-priced items to the higher-priced items as we've seen. In the higher-priced items, with the exception of premium autos and a select few items which have still not got affected because of slowing urban or semi-urban demand, I think the entire pack will move in slowly. So I think the volumes will come, but they will come with a lag effect. It's not that Q3, Q4, you would see sudden spurt in volumes coming through. And therefore, our own sense is that the lower end of the value chain, as far as consumption is concerned, select FMCG stocks, select footwear stocks as an example, certain apparel stroke grocery players, I think they should see the first element of uptick in terms of consumption demand and in terms of volumes, same store growth, as we call it, or otherwise revenue trends, which should improve. Consumer durables, and specifically white goods, should see demand coming back, but it should be slow and steady. So we are not going out there and buying these stocks as we speak. I think we're better off with FMCG, select apparel names, select footwear names, which look better off from a risk reward perspective.